Today we're going to talk about the psychology of trading. This is a very important but seldom talked about topic that I want to talk about today. So there is a lot of emotions involved in trading. As a trader, you will have a lot of emotions playing around in your head when you make money, when you lose money, and before you place a trade and after you place a trade. There's a lot of emotion going on. Okay, the first emotion before you start trading, you would have capital, money that you will need to spend on buying stocks. In this case, we'll use stock as an example. It can be cryptos, it can be some other instruments in trading, but then we'll talk about stocks. So when you trade, when you start enter the trade, before you enter the trade, in fact, you will start to look for a trending market, and then when you buy into the market right here, just like an example, you try to buy it here. You know that there is a downtrend, is trending downwards in the intermediate term, and you're trying to grab the momentum here. When you start placing your orders here, your first emotion here will be both hopeful and also fearful. Two of these emotions actually goes hand in hand. So when you try to enter a trade here, you are hopeful that it will have a big bounce like this kind. And also you are fearful that this is a trap that when you buy completed your transaction, it just fall all the way, break below this one and continue going downwards, just like somewhere around here. You expected it to go up, right? But then the stock, instead of, it has a small rebound and then it crashes down. So this is one of fear that you might have when you place a trade here. So if you're hopeful that it will go up and you're fearful that it will go down, so after this kind of trade, you will have some sleepless nights. If the money is very limited, your capital is very small, and you will sort of like hope that it will work out, that everything will be fine. And then when the market starts moving upwards and you are correct, greed will slowly creep into your emotion. You will hope that it will continue going upwards and you will make more money than your previously set target. Maybe you're targeted to exit somewhere around here when the momentum slows down. Yeah, as you can see, the momentum did slow down here. The candles become smaller. Most people, if I follow my method, I would have exited when the momentum starts slowing down somewhere around here. But then you will be feeling greedy. Another emotion that goes into somehow into hopeful is a sort of like a sub emotion. You will feel greedy. You will hope that it will continue going all the way up. But then when you're somewhere around here, the red candle starts appearing. And this is where you will fear. You will fear that it will continue goes down all the back down here. And you feel that you're you miss the boat somehow and give up all your previous gains and reach all the way back down here. So you will have a conflict of emotion here. When you goes down, when it starts going down, you will um, start looking for something to validate your move upwards. Sort of like to enhance your confidence. You will start looking for news or company announcements, anything that will give you hope that the trend will continue. Again, this is a mix of emotion. There's a lot of fear going on because the candle's getting bigger, and you're hopeful that there will be a rebound somehow. And you sort of like uh, most of the easiest reasons that you will have to give yourself that to stay in the game is even though the price is going down, I am still getting dividends. If there is a dividend stock, you will think that you are getting dividends, so you will stay inside here. No problem if it goes back all the way down here. I am still getting dividend. So as long as I'm not selling, I'm not losing, right? But actually, you lose if it goes down because the value actually depreciates. But then today we're going to talk about emotions. So when you're going down this way, all the candles getting bigger and bigger and bigger, you will feel fear because you might be thinking that the move upwards has already ended here. And you can see that uh, it has gone up quite far from the moving average. So there's a highly probable that it will go all the way back down here and you will lose most of the gains while you waited from November all the way to March. You lose at least half or maybe more than that. So you will be feeling very fearful here of losing your profits. And then suddenly, within a week, things starting looking better. The candles are getting smaller. Downward momentum is slowing down. So you're hoping that it will go up back up again. So you might have another conflict of interest emotion here. You will be thinking that, oh, okay, I'll just wait a little bit longer and hope that it will go back up instead of going downwards. So okay, the first and second, as you can see here, two candles are getting bigger, which is a good sign. But then suddenly the momentum slows down again. As you can see here, momentum goes down very small. All the candles are getting smaller and smaller. So it appears at this moment that a breakout of this previous high is getting slimmer. As you can see this one. So the probability of this breaking above this line is getting slimmer because all these candles are getting smaller, the momentum is slow. But then suddenly the momentum picks up again, going upwards, all the way upwards. And you'll be feeling very happy here because it's performing. You're making money. So you'll be very happy here and you will be praying that it will continue going upwards. So after a few months time, you're holding on to the stock. It has gone up and up and up. And this momentum slows down here. You can see the candles getting very small here. You will feel a little bit fearful on that week because it might go back down. As you have seen here to here, there's not much of a pullback. So this might indicate that a strong pullback downwards. So if you're trading this one, you will feel fear somewhere here. But then the next week will be better as the candles and the momentum is getting better. It continues goes up again and you're feeling happy again. But then when it reaches here, as you can see, the momentum really dies down this time and you will feel fear again. Yet you will feel hope also because previously these candles here, it continues upward even though the momentum slows down, right? The candles continue upward. So this momentum, the dying down, you will hope that the next week, this candle, will continue to be a blue candle continuing upwards. But then instead, it turns into red. When these turn red candles come in, you're supposed to take your profit somewhere around these small candles here. But since this candle you waited for it to upwards, you will hope that it will continue upwards as well. So you'll most likely be hit somewhere around here in hoping it to go up, but instead it continues down. This is where the fear comes in. You will fear that it will continue all the way down here, and you will feel the pain of it as well because you're giving up quite a lot of profits from here to here. And then as the momentum slows down again, you will feel hopeful all over again. And the blue candles, and it goes back all the way up. You will hope that it will continue to go up. it might even break the previous high here. So when you're touching this one, momentum slows down, even though you know that this is a very strong resistance zone. Even when the momentum slows down, you'll most likely be holding this one because you'll be hoping that it will continue breakout, but instead it continues going downwards, and you're hoping that it will turn around soon. But then the candle starts getting bigger and bigger, and fear is coming in to your trade again. You will feel fear because you're losing quite a lot of money here, your previous gains and everything. And you will have noticed that it has broken below the neckline. This has become a double top and broke down all the way down here, and you'll be feeling a lot of fear here and regret, and you would have think that I should have taken profits somewhere around here and here and exited the market. But then you will feel a lot of fear, a lot of pain, and it goes down here, and then you will be thinking about your life choices as well. So when it goes down here, you have, when it reach all the way down back here, which is somewhere around here, see. So you will feel that you have wasted a lot of time from 2024, somewhere in May, maybe May, all the way to here, and you basically you give up all your gains for the past few months, 1 year, about 1 year time. You gave up all the gains, all these gains in 1 year. So you basically wasted your time here, and you will feel that, oh my goodness, I should have taken profit somewhere here. But then you will be looking through all those announcements and news all the way, going through forums trying to justify you holding on to the stock again. And then you'll be thinking that, oh, okay, I'm still getting dividend, right? I'll be holding this stock. So it is again a roller coaster emotion. And when you reach this one, as you can see here, you know there is a strong support here because of the moving average. So you should try to enter here. But then you are holding a stock that you have been holding for the past 1 year. So you will feel a lot of hope here that it will have a rebound. So there is a rebound here. It's going upwards at the moment, and you will be hoping that it will retest the previous high, which is a human emotion problem, that you will try to hope that it will go up back up here. But then there is a possibility that it will touch this neckline and then crash back down also. Is it possible? This is also another possible scenario. Instead of going upwards, so it creates the lower high, and then a lower high, and then it breaks down, and this moving average turns down again. It is another possible what do you call it? Possible scenarios that might happen. So if you are holding this stock at this moment, you will hope that it will retest the previous high and break out. There's one scenario. Second one will be you are fearful that it will touch this neckline and then turn back down and breaks below this moving average. So you will again have two emotions that play around. Fearful of losing, and and greed. You will be hoping that you will break above this one and recoup what you have lost the time waiting for it for 1 year. You will hope that it will break out. So there is again two emotion. So do you think this will be touching here and then goes back down, or do you think it will continue break out? It depends on how much you're holding. If you hold quite a large number of stock from here to here, you'll most likely be hoping that you will break this one, and you won't be selling into strength. But if there is a momentum loss somewhere around this area, it should indicate that it will continue going downwards. But for now, there is no indication that it will reverse at all, because the neckline is this area and the current price is at the neckline. So even if it goes here and then goes back down, it should happen in the next 1 or 2 weeks time, because it's a weekly chart, so it will take some time for it to go out. And also this is a lagging chart. The advantage of having lagging chart is a lagging chart shows you the momentum. The trend is very nicely formed, and also all the support and resistance area is very well, you can see it very well from all. Even if you zoom it out, you can see everything is looking good. So you have think that, oh, okay, if I bought somewhere here and waited for the next 2 years, you're still making money, even though this pullback will have scared you a lot, because it sort of like a pull all the way down from okay, this is a Dow index actually. So this is just an example of chart. It can be an index, it can be a crypto, it can be a stock. So there's no difference in all this. It just the chart is still the same. So just the instrument is different. There's not much of a difference here. As you can see, the lagging chart shows that the lower highs break neckline. So support, resistance turn support. So all these are very well seen on lagging charts. Meanwhile, all this is actually indication that this uptrend is shown here. You can see the higher highs. Also, this is a higher high and higher lows. So this breakout. So this is a very valid move, that if you buy somewhere on the breakout here, you expect it to move all the way up here, and maybe you sell it when the first sign of trouble appears here, somewhere here. So you still make a lot of money doing this kind of trade. But then there's a lot of emotions involved. I just said just now, from here to here, the emotion is like a roller coaster. You will be thinking that you will be making money, a lot of money, when it goes up. And also, every time it goes down, you'll be fearing that you will lose a lot of money and lose your previous profits as well. So it's not easy to take the emotion out. Even after trading for 20 plus years, I still can't take my emotion out of this. It's possible to reduce your emotion, but you can't really take it out. You still fear of missing out. You still fear of losing your profits. And when you are losing something, when you buy a stock and you start losing money, you will be looking through the forums, through Twitter, through any other forums, announcements and everything. You're hoping to find someone mentioning about this stock, any announcement that it has made that make it go down, or maybe it will give you hope that it will continue going upwards. So it's not easy to trade with emotions. But then humans have emotions, unfortunately. So the only way is you have to train yourself and think objectively how you should perform when it breaks down, how these warning signs are shown here, and you should react when the momentum slows down. Just like here, you see, you already know that this is a higher high, and the momentum goes here, and then the momentum slows down on this candle. is more likely to show that there is a big uh, pullback going on soon. So you most likely exit here instead. But then you will be hoping that it will just be a fake when they continue to go up. So it's not easy. Trading is never easy. Every time you make a mistake, someone will take money from you. It's a zero-sum game. But then you just try to be the best player. It's never easy to make money in the stock market. This I can guarantee you. You will lose money. Anyone that says that they don't lose money is most likely uh, running some kind of scam or something, or is not being truthful at all. Uh, everyone lose money actually. Everyone. All you have to do is limit your losses. I previously mentioned stop loss is very important. So if you have a stop loss somewhere below here, just exit when it touches there, or even if it touches and then goes back up, that is a good trade because you follow your rules. So have a fixed set of rules. What will happen? What should you do when it goes down? Where should you take profit? Never deviate from those rules. If you intend to take profit from here, let's say, okay, where's the thing? Okay, this one. Yeah. So let's say you enter here. This momentum, when the momentum slows down, you enter. So let's say you set your target is when the momentums turn into red. So we take this one. We take the lowest just to be fair. So when the momentum starts going down, we'll put our stop loss below the moving average, somewhere around here. So initial, if we enter here, stop loss will be somewhere here below the moving average. And then we won't know the take profit amount because in my opinion, in my method, I'm taking the profit based on the moving average, the smaller moving average. When it breaks below it or it turns red, very near to the moving average, like this one. So I'll exit somewhere around here at the lowest wick of the red candle. So I still make 16% from this trade. So this is where I will exit. And then let's say I re-enter the market again when there's a slow of momentum here. And again, I'll let the profit run. It can run all the way to when the momentum dies down, somewhere here. I'll take the lowest wick over here. And then this stop loss will be somewhere below this lowest wick, anywhere below it, depend on your risk reward ratio. So this is another 12%. You have exited here, this red candle here, and you make 12% plus minus. So it's not good, not too bad, not too shabby. So you still make a lot of money if you trade this kind of stock with your rules kind of tight. You need a few rules. First rule, you have to make sure that you have a stop loss. Second rule, when do you exit when you have a profit in hand? Do you want to hold it all the way back down and like this kind, you waited 1 year and then you lose it all in a matter of weeks? So do you want to do this kind of trade, which is you wasted 1 year here waiting for it to move? So I don't think you want this kind of trade. So you have to decide, how do you take profit? Do you take profit at like what I said just now, the red candle, or break below the moving average? Or do you break exit at the break of neckline. There's a lot of possibilities depending on your rule, your risk reward ratio, how much you intend to take the risk and everything. It's never easy. Never easy. Yeah, if you trade very long, you risk too much money, your hair will turn white from it. Yeah, that's a guarantee thing. You will turn your hair white because of all the worries and everything. But then, if you do it right, you will make a lot of money in return. Yeah, this is correct. So, let's say this is the stock that I am trading. It's a very good stock, as you can see. In the longer term, all these are still looking good. The lows are still going higher. The blue candles are very long. This although is a big pullback, but then there is a lot of potential in this index. It should be going upwards, but then market won't show you all their tricks at once. You might be surprised that it might suddenly go back down from here. So there's no guarantee of it. All you have to do is react to it. Just create multiple scenarios, and in those scenarios you will decide how you will react if it happens that way. So if it goes up here and then goes back down, what should you do? Exit here or what? If it goes back all the way up here and then break out, what should you do? Or if it goes up here and then fail to break out, fake out and then break down again, what should you do? So just create more scenarios for yourself uh, to avoid paralysis. If you paralyze yourself during trade, it's very dangerous because you will be thinking that, oh, I'll just wait it out. Sometimes things are not that simple. You can't just wait out something. It might just break all the way down and you'll be losing money, and pain leads to more pain. And then one of the thing is, never try to average down. If you average down, you will lose a lot more money in this way, because there's a reason for it going down. If you are wrong and you try to throw more money into your what is wrong, you're actually more towards your ego can't accept it. You have to admit your loss, admit you're wrong, and then just cut your loss. That is how it's done. The big losses, you don't lose it immediately. It's all these slow grinding downwards moves that eventually kill you. You will lose a lot of money when the market goes down slowly and slowly, day by day. A little bit bounce and go down again, a bit bounce and go down again. That is what really hurt most trader. You will lose a lot of money if you ignore these signs. Okay, you can see here this gold momentum is slowing down, so there is possibility that gold will not collapse, but a pullback, maybe a pullback, because last pullback is here in December, and it has gone all the way up here without any serious pullback. But then momentum's dying down, the wick is getting longer, so a gold pullback is imminent. Expect some kind of pullback. In my previous few videos, I mentioned that I don't suggest people to buy any gold futures from here onwards, because it's already run up quite a lot. If you buy here and then it goes back down, chances are you won't be selling or cutting your losses. You'll most likely be holding it, thinking that it will continue going upwards. So we won't know what goal will happen main scenario, it will come down in some kind of pullback, because remember, it has outrun the moving average by this much. If it goes back all the way down here and you bought somewhere here, you're into a lot of pain, because the last time it goes near to the moving average is in 2023. So it's due to have some kind of major pullback to the mean soon. It might happen, it might not happen, we won't know. This is just one of the scenarios. So just try to make as many scenarios as possible, and try to imagine what will happen and what you will do to react to the changes of this the pricing this gold. Let's see Tesla. Tesla has been on a very good move upwards, as you can see here. Check out my shorts video about Tesla. I mentioned it a couple of times, a few times in fact, a few short videos about Tesla. When it's going down here, as I already mentioned, that momentum slows down, and if you're a buyer, you should buy in here. And if you buy in somewhere around here, you would have made a lot of money when it goes back up here, because imagine this, you're buying in at 200 plus dollars, and it has gone up about 50%. So if it continues upward until it reaches somewhere here, oh, you're going to make about double your money. Yeah, almost. But then there's a scenario that it might go here and then lose strength again, possible, creating a lower high. So I think I should end this video. Don't want it to be too long. Check out my older videos, especially about Tesla, and I think it's in the shorts. So check it out. Subscribe to my video, and share it out to anyone who wants to know how to be a trader based on the psychology of it, whether you can handle the psychology or not. You have to put money on the table before you really understand how it is to actually play with the money. Okay, so trade well, be careful. The market is bound to have some kind of pullback. It's already pulling back. Short term, let's see daily chart. You can see it here when it breaks out. It's here now. So expect some kind of pullback. Maybe back to this moving average. Then maybe it go up, or maybe it can go down. We won't know, because this is also a support area. So do a lot of these scenarios to improve your thinking, where it might go, where it won't go. Just try to do a lot of research on your own. Don't just think that it might happen this way or not based on what I said. Do your own research. You see here, this is a very strong support turn resistant area. So there is some kind of pullback soon in the market. It might happen, it might not happen, as I've always said. It might break out, it might come back down. So trade well, be careful, because the market has gone up this much without any strong significant pullback. So yeah, check it out, subscribe to my video. If you have anything to ask, type in the comment section, or maybe I will talk about something else next time. So I'm not sure what to talk. So maybe if you have some kind of stocks or anything that you want me to talk about, just type on the comment section below. Thank you.